Let's talk oil because today, in fact, another piece of news is that oil entered a bear market, dropping below $40. Tim Snyder joins us, energy economist with Crudefunders.com. Crudefunders.com. Tim, thank you for joining us.
You bet. Thanks for having me.
Crudefunders. Is that like basically, are you funding oil deals of some kind? Is that it?
Yes, we are. We're actually the nation's first crowdfunding opportunity for funding E&P operations, exploration and production operations. It's a brand new type of program, and we're really excited about where that's going. Folks can go find us on the web at crudefunders.com.
So with oil dropping in price, is now a good time to pursue that kind of thing?
I think it's the best time to pursue that kind of thing. You look at, do you start a new venture when the market's at the very top, or when the market's, towards the bottom, and have an opportunity to work itself out and, not only add, the opportunity for increased production, but also increased price.
Okay. So what is your sense of it? Because some are thinking we may be heading to lower prices even from here for some time. What do you think we're in for?
To be really honest with you, I think as we look at these markets today, I think we woke up today and realized that, we've had 5 straight weeks of increases in the Baker Hughes rig count. We've had no change in the amount of production that we've been dealing with from around the world. World production, most especially, that everybody talks about OPEC. You see the Saudis have increased their production.
Yeah, because you're right. They're increasing production. Iran is.
Right.
What is happening there? Why are they doing this right now?
Well, now they've kind of gotten themselves into a double-edged sword sort of situation where they needed to try to manage as much market share as they could. They let it go on too far, and now they're in a situation where they have to increase production so that they can get that cash flow that they need to meet their government's demands. And you see, that's the big problem. That's the difference between the United States and, of course, most OPEC companies, not all countries, but most of them, because we don't fund our government with crude oil revenues. Saudi Arabia, Iran, Iraq, those countries do.
They rely on it. And so tell me, when you look at market share, where does OPEC sit right now?
Well, OPEC is the big producer. They produce about 32 plus billion barrels of crude oil every day. United States production is at 8.2, and it's down almost 1 million barrels per day from its peak in 2014. So, we're the ones that have been the good players, the fair players. We actually reduced our production here in the United States. We sat back. We've been kind of keeping our powder dry. We're looking at our expenditures for next year, CapEx expenditures for next year, actually beginning to increase, but it's going to take a little while to get through this oversupply that we have here in the United States.
So what does that mean? Because right now you've got Iraq, Iran, Saudi Arabia, even Russia has been increasing their output, I believe, right? So.
Absolutely.
So what does that mean if you look for the rest of the year? Are we just going to see gas prices and oil prices coming down from here? Or?
I think we will. I think we could see the mid-30s in the crude oil prices. Gasoline, on a national average, we could be back below $2 a gallon, which would be wonderful for folks around the country that have really, been hit and watched their budgets, get completely blown away. This year's been a crazy year. We had crude oil at $26.55 a barrel in February, and $51 in June nearly. And, now we're back at $40.06 per barrel. So things have pulled back a little bit. I think we'll pull back for a couple of months more, probably working towards Christmas. And then right at the end of the year, towards the beginning of the year, as demand starts to increase for the 2017, we'll start seeing increases in prices as that supply begins to wane.
And what do you think is ahead for these Middle Eastern countries and OPEC? How strong are they going to be able to remain?
Well, you got to look at it from the standpoint of they're primarily one-trick ponies. That's their biggest revenue source is selling crude oil. There's only a certain level that they can go to. Nobody can compete with the Saudis because of their what it costs for them to pull a barrel of oil. compared to the other parts of the world. But, the smaller players are going to suffer and suffer mightily. Venezuela is a perfectly good example of a country that's going to suffer because of the production that is being pushed by Saudi Arabia, Iran, Iraq, those kinds of countries.
Oh, they're going to suffer, you're saying?
I think so.
Oh, that doesn't sound good. Do you think that when you see these countries fighting and getting so aggressive with each other, how much of that is oil the underlying issue?
It's 100% oil.
Is it? Okay.
Yeah, absolutely. It's 100% oil. The thing that concerns me is that if it goes too far and too long, and we're getting to that point, there could be some geopolitical backlash. The Russians may go do like what they did, several years ago, and try to go take over another part of the old Soviet Union, and bring that back in under their realm, if you will.
Is that about oil too? Do you believe? Or?
Absolutely.
How so? How does that have to do? You're talking about the Ukraine, that invasion?
Yes, I'm talking about the Ukraine, and the situation that we look at there is that that's a big natural gas producer in the Ukraine, and of course Russia itself is a crude oil producer. So one of the things that they have to do is when you get to these winter months, they need to get that natural gas to where they can use it throughout Russia, and they're very protective of the things that they have. What they used to have, they're still protective of.
And you're saying that Ukraine has a lot of these resources? Is that it? Or?
Yes, they do. Yes, sir, they do. Plus, they have a port.
And they need that to move the oil?
Yes, sir, they certainly do.
So, because I remember when the Iraq War started, there were those that were saying, hey, this is all about oil, but it didn't seem like that's what we were aiming at there. Do you think that had a lot to do with oil also? Or?
I think it had probably 75 to 80% about oil, maybe a little bit worried about weapons of mass destruction. That was probably the thing that was the big
and take me back there. What was the concern oil-wise that led us to make that move on Iraq?
Well, the OPEC was created in the late 70s to counter the increase in production that the United States had when after the 7 Days War and the Arab oil embargo. So they began, OPEC started to counter those prices, and, in 76, 77, 78, prices doubled in gasoline. They sometimes tripled in gasoline. And so they were, OPEC was created to try to protect the new production that was being drilled in the Middle East. That has put us in a pretty serious.
What was Iraq somehow? Was Saddam somehow threatening that, or?
Oh, most definitely. They not only were they threatening that, they're not as big a player as the Saudis were. That's why we've always been behind Saudi Arabia and trying to protect Saudi Arabia. But the geopolitical angle in this is as important as anything, and what drives this is what drives the world economy, and that's crude oil.
Now, what's the real concern? Why is it? What's the vision? If there is a real disturbance in the Middle East of some kind that affects oil's movement, what is it that would happen to us?
Well, here's our biggest issue. We currently need about 16.4 million barrels of crude oil every day to meet refinery demands in the United States of America. If we're only producing 8.2, that means that we're actually producing only half of the crude oil that we need to meet the refinery demand. So we get the rest of it from OPEC. We get, for instance, like Venezuela, Mexico.
And if there's a 1 or 2 day disruption, is that enough to tip things over for us? Or?
I don't think it's enough to tip things over, but what it does is it sends shockwaves through the market in terms of risk.
Have we gotten close to any real disturbance in your view?
I don't think we have yet. The disruption that we saw in Canada in the oil sands area was something that concerned us a little bit.
Well, that huge fire they
rebels, yes, sir. The huge fire, yes, sir. Then the rebels in Nigeria has been an issue. Nothing that I've seen that has had any sort of profound effect on this thing. We'll see probably a small bump if that tropical storm or supposed tropical storm develops in the Caribbean. So there are issues out there that can change prices right now, but right now nothing that looks long-term and that dangerous.
Tim Snyder, energy economist at Crudefunders.com. Crudefunders.com. Tim, thank you for your expertise on WILS.
Yes, sir. My pleasure.